Welcome. In this video is Xcn coin about to break the big downtrend. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. One of the most notable technical structures on the chart is the major falling trend line, which has been a long-standing and highly suppressive influence on the price. This line has acted as resistance many times in the past, limiting the price's upside moves. However, in the current outlook, the price has once again approached this major falling trend line, and this time, it is much more determined and stronger than the previous attempts. The fact that this important line, which has been tested for a long time, is much more likely to break this time can be considered as a very positive and promising signal from a technical point of view. Falling trend lines are usually formed when market participants are indecisive. The price encounters sellers every time it attempts to rise, making lower and lower peaks and falling. But downtrends don't last forever. At some point, the price breaks the pressure and starts writing a new story. The technical structure we are currently observing suggests that we are on the verge of just such a breakout. The price is trading very close to this dominant downtrend line, and the volume of buying at this point makes it clear that market participants are now willing to break this trend. Especially such major trend breaks usually signal the beginning of a new and strong trend. This is because this trend line represents not only a short-term movement, but also many past price levels and market psychology. Therefore, a break of such major trend lines is considered a very strong break in terms of technical analysis. If the price is able to cross this level to the upside, the uptrends that were not previously driven by this trend can now be experienced much more easily and strongly. Breaks of such major downtrends are often accompanied by sudden and strong rises. This is because this line has long established itself as a resistance zone in investor psychology. Once this level is breached, traders take positive positions with the idea that resistance is gone and fresh buying interest comes into the market. This leads to higher volumes, larger trade sizes, and much more stable uptrends. In short, this line is not only a chart element, but also a representative of a psychological barrier. Breaching this barrier signals a major transformation in market psychology. Looking at the current technical structure, we can see that price's recent contacts with this trend line have come from healthier and higher lows. This suggests that sellers are slowly losing their power and buyers are starting to take control. Especially when the price approaches this trend line with a higher low, it can be interpreted as a strong bullish signal that can be interpreted as a positive mismatch. These technical details increase the belief that the breakout could be real and permanent this time. Also, one should pay attention to the increase in volume during such breakouts. If there is a significant increase in trading volume. As the price breaks this major downtrend, we can understand that the breakout is supported not only by technical, but also fundamental forces. In this case, it is clear that the market is taking the breakout seriously and new buyers are coming in. In such a scenario, the broken trend line is no longer resistance and becomes a new support. This makes it easier for the price to use this area as a springboard to reach higher levels. Breaking this major downtrend can trigger not only short-term uptrends, but also the start of new long-term trends. Especially if this trend line can be observed on monthly or weekly charts, the price movements after the breakout can be much larger and more permanent. This is because trend breakouts on long-term charts attract the attention of big players and institutional investors. With the entry of these players, the strength of the uptrend increases much more, and the price can gain momentum towards previously untested levels above. But we cannot decide the analysis only with trends. Let's look at other metrics. Stay tuned. When examining the chart, it is evident that the price has entered a highly critical and exciting phase according to the larger Elliott wave structure. The first and second waves within this structure have successfully formed in the past, and the price now appears to be rising from the bottom of the second wave, making a strong move toward the third wave. From a technical analysis perspective, this stage is extremely important and indicates a positive development, as the third wave is known in Elliott wave theory as the phase where the strongest and sharpest upward movements typically occur. Especially in larger time frames, Elliott wave structures tend to provide much more reliable signals for investors. At present, the price has completed the second corrective wave identified on the larger time frame and has now started moving toward the third main wave. This suggests that buyers are regaining strength in the market and that there is significant momentum in the upward direction. The surge following the second wave is usually sharp, strong, and decisive, as investors who recognize the end of the correction begin buying, increasing volume and supporting the rise. The third wave is typically where the largest gains are made, both in terms of volume and price movement. During this wave, the majority of the market becomes convinced of the uptrend, which gives strong direction to the price. According to Elliott wave theory, the third wave is expected to move at least 1/618 times the length of the first wave. This ratio, supported by Fibonacci levels, represents the phase where market psychology is most bullish. In the current price movement, a clear push toward this level can already be seen. Moreover, it's a strong possibility that this wave won't stop at the 1/618 level, but may have the potential to reach higher targets, such as 2,272. These levels have historically been the destinations or even exceeded targets for third waves in many successful Elliott wave examples. In this context, the current technical structure may signal not just a short-term rise, but also the beginning of a larger and more sustained bullish trend. Reaching these levels could present significant profit opportunities for investors. Also, it is particularly important that the current move follows a correction, as second waves are typically periods that mislead investors and create uncertainty. However, the third wave that comes after these corrections usually ends the ambiguity about market direction and initiates a clear trend. The current upward movement shows that this clarity has arrived and that the third wave has actively begun. One of the key points to monitor during this process is whether the price can surpass the 1/618 level. If this level is broken with strong volume, it would mean that the third wave has overcome not only its technical targets, but also psychological barriers. This suggests that the rise will continue in a more stable and reliable manner. The 1/618 level often acts as the first major resistance, and once it is broken, market momentum typically accelerates. After this, higher Fibonacci targets like 2,272 come into play. Reaching these levels would indicate a significantly higher market valuation on a large scale. There is always a possibility that the third wave in large Elliott structures could extend. This means that aggressive rises exceeding not only the 1/618 level, but also 2,272 can occur. Such scenarios usually develop alongside high buying volume, positive news flow, and strong market psychology. Looking at the current price movement, it is evident that all these conditions are starting to come together. Therefore, it is possible to say that, from a technical standpoint, much higher levels could be reached in the upcoming period, and investors may achieve significant gains throughout this wave. When the MACD indicator is analyzed, it is seen that the price movements have recently taken on a very remarkable structure. The intersection of the lines, one of the most important features of this indicator, gains even more meaning, especially when it moves above the zero line. In the current outlook, the MACD lines have made an upward crossover, and this crossover is not only a momentary movement, but also a sign of an ongoing momentum. When the MACD line crosses the signal line from above, it is usually interpreted as a strong buy signal. Such an intersection is of great importance as it indicates that traders' appetite has increased and the market is turning upwards. In particular, the fact that this intersection occurs above the zero level is considered an extremely positive sign in technical analysis. Because while there may be some doubts about the continuity of the uptrend in crossovers below zero, a cross above the zero line usually reveals that the trend is strong and that this uptrend is supported. We should carefully examine MEC crossovers. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.